Hi everyone, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by wavestrategy.com and the learning series of Ashish Kyal Trading Gurukul. We have been in an unprecedented terrain where markets have bounced back very sharply from the lower levels to the highs. And until yesterday, which was today is an off, until yesterday, majority have started having the feeling of left out. I'm sure that many of you are already feeling that you are left out in the market because it nifty rallied from the lows towards the highs of somewhere around in the zone of 9,900. I'm sure the high made yesterday was the levels around 9,890, and you have been expecting probably markets to come down. But a very interesting aspect I'm going to share with you all, it's that the previous, if you have been attending my webinar, we have been I've been talking about the entire socioeconomic perspective of the market. By that I mean is, when the lockdowns were announced for the first time, if you remember, I discussed this about a week back, 2 weeks back also. When the lockdown was announced, Nifty moved on the upside. The low was formed around the zone of 7,500 to 7,600 on the first time when the lockdown was announced. Nifty rallied sharply from there. The next time the lockdown was extended, Nifty continued to rally again on the upside. And post Sunday, which is 3rd of May, we are expecting relaxations and opening of lockdowns on the few districts and probably few states. And we are seeing already SGX Nifty, which is down by more than 500 points. Now that is something very interesting. I talked about even in my last webinar. Anyone attended my last webinar from here? I'm sure I see a lot of names who are there. Arun, you have there. Arvind has been there. I'm pretty sure a lot of you people were there even in the last webinar. Praveen, great to see you. Mangesh, Utkarsh, fantastic. Mahesh, all of you from the mentorship batch. I think you people are simply enjoying the entire mentorship and also the webinars that we are conducting. And so if you have been listening to me all the way over past whatever number of weeks, I've talked about that whenever there has been an announcement of a lockdown, Nifty continue to move higher. And now when there is a relaxation and the economy is about to open up, we are seeing a crash back again. If SGX Nifty has something to tell you, it's down by 500 points from the closing. It's 7,311. I'm sure we closed around 7,856. I'm not sure what was the May futures, but that is the zone that we closed. And you do your math and you look at it, how much are we going to fall? We are going to fall by more than 500 points on a Monday. And you will not believe, many of the people to whom I spoke with, they were very apprehensive that this is the start of the next bull market and we are not in the trend. We are not in the trend. We have missed the trend. This is the start of next bull market. And the biggest part of it is the movement of last 400 points came in only 2 days of time. It was Wednesday and a Thursday. On a Wednesday, Nifty was up by 200 points. On Thursday, it was up by 300 points. So 400 to 500 points of movement came only in 2 days. Out of that 2 days, on a Thursday, Nifty was gapped up by 200 points. So ideally, what you missed actually was the 100-point movement on Nifty, because prior to that, it was only trading somewhere around 7,300 levels, which it has been dragging and dragging and drifting for more than 10 days. 10 or 12 trading days, which means for entire of the month, because we had a lot of holidays in April, for the nearly 4 or 5 holidays in April. So if you look at the number of trading sessions, it was very less. So in entire of April, it was simply drifting in the sideways for nearly 10 to 12 trading sessions. So that clearly showed that the 2 days of movement resulted into so much of an emotional flux within the people who were not in the trend, that this is the start of the bull market and we are headed towards I don't know what levels, and we have missed the entire trend. Here is the opportunity for each one of you again to get into the trend. If you think you missed it, here it's Nifty going back towards the level of, I'm so sorry, I think I've said 7,300, 9,300. I'm not sure why I'm stuck with 7,500 odd levels. I'm just not able to get it out of my head. But I think here is an opportunity for you to again enter into the market. If you think it's going to go up 9,300 on the cards, maybe on a Monday with a big back gap down opening, and then you are again going to talk about that it's good I did not buy the trend. And once you, if you see it going back from 9,300 to 9,700, again you will have an emotional flux. Okay, probably I missed the trend again. So that is what is going on. Lot of people, I've actually tweeted, if you follow me on Twitter at the rate Kyalashish, I have actually tweeted about 3 weeks back, 3 or 4 weeks back, that in this market there are lot of people who are not happy, or because they have either missed the downtrend, if they are in the downtrend but they got out too early and did not ride the entire trend, or probably you are just long and stuck on the option writing side. If you have written the put options, you have been screwed when it went to 7,500, 8,000 levels. And if you have written the call options, you can see what has Nifty done. So if you have paid any heed to my webinars, which I have been talking, I have been constantly telling about the option sellers beware. This market is not for option sellers. This market is for option buyers if you are on the right side of the trend, because option sellers are going to be punished left, right, and center, and that is what we see. Also, I talked about the bear market. The bear market are the markets where you are going to see the trend very sharply on the downside and equally fast reversal, which we saw. This reversal came out extremely sharp only for the period of last 2 or 3 days of time, and rest of the time it was just dragging and drifting. And in these 2 or 3 days of time, you don't know how many mails did I receive which mentioned that the markets are going up. Do you think it's going back towards 12,000, 12,400 odd levels? I'm not sure where that figure came from again, and why everyone started thinking we are going back towards the new lifetime highs just because we rallied. The another challenge I'll tell you is what many of you are actually feeling, that once the market starts rallying, there is no tomorrow. Again, tomorrow it's going to go up by 300 points, 400 points, and you are going to miss it, the entire trend. Now, what happened? The risk of you being on the long side, can you see that? This is exactly the reason why you have to be very cautious in the current market scenario. If you are going to be trading based on your emotional flux, you are always going to be in and out exactly at the wrong time. You wanted to get into the market when it went towards 9,700 or 9,800 levels, and now when you see a 500 points gap down, do you know how much you would have probably saved by not getting on the long side? Can you understand the risk that you carry? But the problem is people have a very short memory. They forget about what happened just last month, forget about 2008. They even forgot what happened last month. Last month we were crashing like crazy and everyone thought it's not going to stop, and now everyone thought that it's not going to stop going back on the upside, and you can see it just reversed. Probably it will reverse. I'm not saying on Monday. It looks like that it's going to be reversed with a bang, with a huge gap down. And if you are on the long side, you have just no clue what to do next, because you had a stop loss of 100 points or 150 points and you thought, where is the risk in the market now? Because you will get out in 100 or 150 points down move. But now it's going to open 300 or 400 points below your stop loss level, and you have absolutely no clue how to trade from here on. That's when the money management kicks in and it plays a very, very vital role. So in my mentorship batch, which has been ongoing, you will not believe the most of the time I've been talking about risk management and money management. Many of the people and market veterans in their trainings, they talk about how to make money, how you can make billions. I talk about how you can manage risk. I don't know, because that's how markets are going to be. Risk is the only thing that you are aware of, and the targets that you set is what your expectations from the market in the future. But what is known till now is your stop loss and the risk that you are going to take. So if you have to evaluate anything right now, you just have to do it based on your risk and how much you are okay losing. That's one. What is your money management? Do not risk more than 3% or 5% of your capital at any given point of time. If you are going to risk more than 4 5% of capital and something like this happens, your risk management is going to go for a toss, because you had a stop loss on Nifty, say at 9,800 or 9,750. It's directly going to open at 9,300, and your entire stop loss has gone for a toss. So the risk management can go for a toss, but money management, if you're risking only 3 to 4%, instead of 4%, you are now going to end up losing 6%, which is still bearable and acceptable. So there has to be a trade-off between both of these things. Next very important aspect, never ever talk that you have missed the trend. When you do that, there is a very strong emotions that you are going to be probably placing it on yourself. Not for this trade, for the next trade that you are going to take, you are definitely going to be using your reference of this trade into your next trade. That's how it happens. That's how the mind functions. Whatever has happened with you in the past 2, 3, or 5 trades, you are having a very strong bias in the next trade that you are going to do. For example, if you are losing in constantly 3 or 4 times, the fifth time that you are trading, probably you are not going to take it easily because you are thinking it's not going to work again. Next, if you are making some profit on the fifth trade, you are not going to wait for that trade to give you a killing, because you just want to get out at least with some profit, which you have not seen since 4, 5 trades last time. So that's a bias. You should ideally be waiting because this is the right trade finally you got, and you should be trailing it and riding it all the way. But in that scenario, you have been probably in a drought like situation where water has been scarce and you get an ocean, but you just drank a little and you don't want to be drinking more and you want to conserve. That's the bias, because you don't want to trade, you don't want to probably lose out what you are making now since you lost 4 or 5 times. That's one way of looking at it. The next way, if you have been making money in last 4 or 5 trades, you become reckless. And what happens is, the fifth trade you should not be taking because the risk is way too high, but you have a cushion of profit and you don't mind risking it. So that is what has happened with the current scenario. People who have been riding the trend, making 100, 150 points on Nifty, up, down, and they thought, okay, let me buy it again at 9,900. It will go to 10,150. They bought at 9,900 levels. I'm not talking from the intraday perspective. Intraday is perfectly fine, but from positional perspective, if you're looking at buying Nifty for a days, for 3 days, 5 days horizon, and you thought, okay, I'll keep a 150 point stop loss, it's not gonna work, because you have seen Nifty. How many of you remembered Nifty movement about 3 weeks back? Can you tell me what is the average movement of Nifty happening about, maybe not even 3 weeks, about 2 weeks back? Can you tell me what was the average movement on Nifty about 2 weeks back? 350 to 400 points, Nitin. Great. Yes, Rakesh. Absolutely. 300 to 400 points. Can you see that? Absolutely. 400 points was like a norm about 3 weeks back, right? You are seeing those kind of movements so easily happening. And now, can you tell me in last 3 or 4 days of time, how much is the Nifty movement you have been seeing? Absolutely, Gaurav, Om, everyone. So last 3 or 4 days, 100 to 150 points. Oh no, not 300 points in last 3 to 4 days. Last 3 to 4 days, only on a Thursday you saw a 300 point movement, but normally it is moving anywhere between 150 to 200 points. So what happens because of this movement of 150, 100 points, 200 points? Now you start expecting it to move within the period of around 150 points. That's the average mindset. Now suddenly on a Monday, if again moves by 500 points, you are all shocked because it is again moving by 400, 500 points, which it did not do in the past 3 or 4 or 5 trading sessions. So that's why the entire thought process keep fluctuating between the number of movements of points that Nifty is doing. You might think I'm not sure what I'm talking about. So let me just clarify what I'm trying to communicate. You need to look at the chart. You need to understand that Nifty was about just a week back or 2 weeks back was moving by 350 or 400 points. It is just over past 1 week it started moving, or probably 5 trading sessions it started moving by 150 points, which means the risk which of moving by 300, 400 points is still not out of the woods. Okay, that's one. So if you have to trade positionally, you need to always open with the fact that you might end up having a 300 points against you due to the gap. Once you have that perspective in mind, you will never creep that you have missed the trend, because you know 300 400 point movement is normal. In current scenario, in a bear market, movement of 300 400 point is absolutely normal. And that is the reason why you should not be surprised when the markets move by 500 points. I'm sure many of you who are looking at SGX Nifty, it's down by more than 500. You see there only 470 plus, but if you look at the actual level, it's down by more than 500 points. And on a Monday, you are in for a shock because you are looking at relaxations, economic turnaround, everything opening up, and the markets moving down. It's like driving a car looking at a rear view mirror. Markets are not doing that. Markets are discounting what's going to happen in the future. And that's why you shouldn't be surprised looking at what markets are actually doing. In fact, 3 days back, I published an article on money control. If you have been following me there on money control, you can search for my article. And I published 3 days back that we are entering into a sell cycle on a Nifty, and that's going to be bottoming out only by the end of May. Very clear. Now, someone who read that article on a Thursday would say, I'm a fool to write something like bearish like that. But now on a Monday, you will then realize the importance of that research which I did, because the cycles are in sell mode. It does not matter what is the news that comes up. Next, some people on Twitter believe that the markets are moving because of the news and all the charts are useless. I'm like surprised. How can you be such a strong rejecting a method which has been developed for centuries? I'm not saying I have developed anything. It has been developed for centuries by people, and thousands of books written on it with absolute proof that how charts can help you make money. And how can you simply reject it in a tweet that it does not matter and it's the news that drives the market? That surprises me always. How can people be so conclusive about methods they will never ever learn in their lifetime, and they don't know what they have probably missed out if you are having such a strong opinion or conclusion about something which is not absolutely true. So that's the thing. I also mentioned an adage on my article 2 days back. You can read it on my website also, wavestrategy.com. I mentioned sell in May and go away is a very famous Wall Street adage, and that is what maybe we can witness now. So that's like a classic way uh, to look at it. So that's what I'm talking about. Is there are a lot of studies that I have done, a lot of research I have done based on that. There is a lot of risk that people take without even understanding that what they are against into. This is a bear market. We are in wave B of a bear market, and I'm not sure where this wave B is going to end unless the support levels break. I've been constantly saying that we expect C to start on the downside once the support level breaks, and we have to wait and watch for those support levels to be taken out. By that, people assume that you have to probably short the market right now and it's going to go down. That's not the correct interpretation. You have to wait for the support levels to break and price to confirm on the negative side. Next, there are people who have long term portfolios, which is from the 3 years to 5 years perspective or maybe higher. Those people are looking at short term movements to decide their investment from long term. Now that's a blunder. You cannot look at a daily and an hourly chart only to decide whether you want to be getting out of your entire portfolio, which you are building up for 5 years perspective. That's a blunder to do. From the long term perspective, we might still be buying on the dips. That's a different portfolio altogether, which is from 3 5 years perspective. And we do recommend those stocks in the multi-bagger category of research if you are subscribed to that, because that's from 3 years perspective that we expect it to eventually go up when the overall systematic risk comes down. And from the short term perspective or medium term perspective, the risk is elevated because we are only in wave B, and C, D, E, F, G, or maybe a triangle in the form of 5 legs, or maybe a flat in the form of 335 is about to start. So you need to always understand, if you have a portfolio for 5 years perspective, you do not liquidate that portfolio just because you expect markets to go down by 500,000 or 1,500 points. you are actually selling off a good portfolio of stocks if those are not PSU banks. I am not a fan of PSU banks. So if you are selling off a good portfolio of stocks in expectation that the markets is going to fall by 10,000 points, which you build up for 5 years perspective, that's not a correct strategy. You need to get your perspective right. If you have doubts, you can always reach out to me on helpdesk@wavestrategy.com. If you have a portfolio, you need any advice, I will be more than happy to provide any research and advice on that. So, but don't do that. If you have a portfolio of 5 years, do not use that 1,000 point movement on downside to liquidate your 5 years portfolio. Yes, you can probably come down to a 50% investment and keep 50% cash so that you can buy more on the dips. So that's the strategy. But if it's a portfolio of just 6 months horizon, then yes, this is the time to get out, because we don't know what we are against right now. We don't know what we are against in terms of pandemic. We don't know what we are against even now in terms of the market movement, because this is the period of economic distress. We are not out of the woods. The fact that FMCG and pharma had been the best performing sector in 2020 indicates that from the economic cycle perspective, we have moved from a interest sensitive stocks and sectors towards the defensive stocks and sectors, and this happens when we are in the early contraction of an economic cycle. If you understand Stowell's pyramid, that's how it functions. One very interesting aspect I wanted to share across before we move on further. Okay, before that, Ayush has written something. Can a wave 2 or B bounce come after Monday carnage for given small opportunity to enter? Yes, possible. So we might open with a gap down on a Monday. We might pull back again in the form of wave 2 or B, yes, of a minor degree, and then we might start the downtrend. But Monday is going to be very crucial. If we have a gap down of 500 points and we fill the entire gap during the day, maybe the bigger degree wave B will continue. But if we do not fill the gap and we go sideways and sustain there, then yes, we might be again resuming the big downtrend exactly at the time when no one is expecting. That's how it happens, right? That's how the entire rise also came in. Do you expect Reliance to revise the rights issue price lower that of 1257? That is Reliance. I am not fighting against Mr. Ambani. He's the guy. So I have no clue what's there in his mind, but I have my doubts he's going to revise anything on the downside. I don't expect that to happen, and I don't want to comment anything more on that. Uh, then it may make a diametric pattern. Yes, Mangesh, absolutely. So we are in a diametric pattern, not a terminal pattern, because diametric is ongoing right now. We will see how the pattern has been filling right now, and this wave B has indeed retraced 50% of that. Arvind, you are correct in saying that. Monthly update still achievable. We will see. We will talk about that monthly research. You are going to get that monthly research in next few days of time, and I am going to be very much clear in mentioning in that monthly research what's going to happen. Reliance GDR is down 4.5%. The markets are crashing, so GDR has to be down. Any individual stock will lose its identity in the bear market, and that's why I love the bear market. Individual stocks will, when the market crashes, those stocks, however good you call it fundamentally or technically, does not work. It just crashed with the broader market. But when the market stabilizes, maybe if it's a good stock, it will start outperforming first ahead of the other stock. So that's a characteristic of a good stock that you might look for buying. Okay, I want to share across one very important aspect on on a contest that we were running last week, and it's fabulous to see those things. So there is a traders forum section. This is wavestrategy.com. If you go on a traders forum, there are a lot of discussions which has happened, and you can clearly see over here diametric in Infosys. It's posted by one of my mentees, I suppose, which I shared across even on the Twitter and all those counts. There was a contest which I run, and over here, and many of the people participated. You can see what I was surprised to look at it is no one, only around 3 or 4 people guessed that Nifty is going to go above 9,800. Out of that, those people, 2 of them have actually attended, I suppose, our mentorship or probably the Master of Waves program. Rest, all of them were expecting Nifty to be around 9,400, 9,500. So majority, the actual average that you look at, people have mentioned about, have been in that zone. So this has been the rally which was actually deeper than expected, but still no one was anticipating it, and that's why there was a miss out feeling. So you can go through this page and you will get some perspective on what many people are actually perceiving, how the markets, what is the sentiment. So this can be looked at from the sentiment perspective also. I know it's a very small sample of around 80 or 90 people who participated, but still that is okay with me, because that shows that 9500 is 9400 or 500 is the level that majority were expecting it to expire. I think most of them were right, but only off by a day. That's why timing is so important in the markets. If you're not able to time it well, you probably miss it. So if you would have been only a day ahead, you would have probably been right. That's what the market does, right? So uh, and I am going to be also showing across. So that's the traders forum where you can go at. You can probably go and check the press release over here. You can look at the bullseye trade show, which I won last week based on the various stocks that I have recommended. So you majority of the stocks that I have talked about and recommended there, you can probably see that, and you will be able to understand all of those things, how you have to go about it, how you have to look at the stocks and things like that. Okay, so that's very, very important for you to understand which stocks are selected based on how the nifty movement is happening, and a lot of those things are very, very important for you to look at it from that perspective. That's next. Okay, let us now start looking at the charts and understand what do you think about from the charts, where is nifty headed and how it looks like overall on the movement of uh, from here on. So how much retracement do you think, guys? How much retracement do you think nifty has done from the top? How much is the retracement? Can you share across? So Ravi, I'm not sure if you are just judging it by looking at 3 or 4 calls. So I'm going to make one thing very clear. Some people, why do you have to look at only 3 calls or 2 calls and understand that probably it's a bad research? Always understand this is against the market that we are trying to trade and make money. It's not an easy thing to do. And you need to understand there is overall and on an average basis, you need to understand that thing. So it's not going to happen overnight. It's going to be happening on an average basis. So that is very, very important that you have to understand. And okay, so I think Monday is going to be very crucial. If we fill the gap on the upside, it looks highly unlikely. The reason being, many of the people had a very strong emotion of being left out of the market on a Wednesday and a Thursday. Those people would have probably entered the market around the zone of 9700 or 9800 or maybe 9850. Now those people are weak hands. Those weaker hands are buying the markets after the rally has happened. The stronger hands are distributing is what I am looking at. Now once the gap down happens, unless the strong hand starts buying, the weaker hands have no other option but to run for their long positions and probably start squaring off. So if we do not see the pullback early on after the opening, first or second hour, those people will start squaring off their long positions. If they start squaring off the long positions, then the selling pressure is going to intensify further. So do not surprise Nifty, seeing Nifty going down by 600, 700 points in a single day, and you are going back to how we started in February. That's how the C wave should start, and that's how it looks like going to be starting soon. From the crude, I think crude uptrend is going to be only limited. We will see the downtrend, and all marketing companies always avoid. Gold, I think, is going to go up again because the rupee is going to depreciate. Attending MOW kind contact help desk. Yes, Shailendra, there is a separate traders forum I have created. You can post your charts and queries. A lot of people have done that. And around have a full faith in you. Thanks, Utkarsh, very much. Really appreciate your kind words, and thank you. I think we are already over time. I have to keep it short in 20-25 minutes, but I keep talking a lot of things I want to share across. I'll be sharing that in my tomorrow's mentorship batch. So I'm going to talk a lot on that. If you are interested in the mentorship program, do enroll now before 10th of May for the early bird, which is going to start in mid of June for 3 months. I'm going to talk about how to look at markets, how to trade. A very important aspect is risk management that majority of the trainers or teachers don't focus, but that's my focus. And how to look at Elliott wave, Neo wave, combined time cycles. So that's very important. Yes, you can see changes in the OI, and we are going to look at 9300, 9400 as an important support. So that's very important, and it's great to see. And each one of you, I'm sure, stay safe. Even after third, the relaxations will happen, but things are not going to improve yet. We are going to be in some uncharted territories. So stay safe. And my book, I have written a book which is going to be soon published globally. I'm expecting it to be done over next 2 or 3 months. I don't know how much time it's going to take. So I'll be more than happy to share it across over here. And thanks for the wonderful participation. And for any queries or anything that you would like to join us, you can always reach out to me on 99204 22202. Follow me on YouTube at the rate Kyal Ashish. This webinar will be available there. And the Telegram group, Ashish Kyal Trading Gurukul. I think it's called AK Trading Gurukul. You can follow me there as well. So I'll be more than happy to answer anything that you might have over there. Thanks a lot for your time and have a wonderful day.